TradeFinder Live and the first TradeFinder Live of 2025. Great to be back with you all. Lots of exciting topics to discuss in this session. First and foremost, we do have to cover our disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Please feel free to take a screenshot if you like. That's the main point to take away. There's no Santa Claus rally this year, apparently, and the news the past couple of days seems to be driving the short-term moves. So interested to see where Rob thinks we go from here. So without further ado, here's Rob.
Hi, everyone. Let me add my Happy New Year as well, and welcome to the first TradeFinder Live of 2025. Nice little rhyme there. Hope everybody had a great holiday season. You got a chance to take a little time off, spend some good quality time with family, friends, and relatives. Let's talk about the market, which is what we're here for. And as Zach mentioned, it's been a pretty interesting couple days. I did a market outlook, and while I'm talking about that, if you would like to join us tomorrow night, we are doing a presentation on what AI says for the market outlook of 2025. So ask Zach to put that link in the chat box if you'd like to join us for that event. Love to have you. Talked about my market outlook. Let's add in what AI adds to that and see what happens for the market. So lots to talk about tomorrow night. It'll be a great session. Again, love to have you join us. All right, so what's going on the last couple of days? As Zach mentioned, no Santa Claus rally. The Santa Claus rally is really defined as the last 5 trading days of the current year and the first 2 trading days of the new year. Normally, that's an upward movement with kind of low volume, low volatility. That's not what we've seen the past few days. So we had a little bit of a start to that on Christmas Eve, and then it all kind of went the other way. So we went to the downside here. A couple of things to talk about, but there's lots of patterns that we need to discuss. We still have this ascending pennant pattern, which we're trying to break out of and are testing at this current moment. And so we moved back up to 600 and came right back down to the 580 level. Now, the interesting thing about that is it did create a bit of a classic head and shoulders pattern. So let's bring that into the mix. So that will be the left shoulder there, the head, and the right shoulder. Every now and then you'll get one where they have like what they call a humpback, where you have a little bit more of a move on one side or the other. Is that what's going on? Or has the head and shoulders pattern been disqualified? We're going to find that out. We did have a gap up in yesterday's market move. I'll bring up the screen a little bit bigger there for you. There was the gap up. And we talked to our subscribers yesterday in our Evo Trader Live that everyone knows. Anyone that's listened to me before knows that I don't like the gaps because gaps get filled. Well, we've already done that rather quickly. And that's the key when you have a gap. Is it going to get filled immediately, or is it going to take some time? Sometimes it goes one way. Sometimes it goes the other way. So yesterday, the reason that we had the gap up was, there's been this concern about Trump and all of his tariff talks importing inflation. And that would be something that could quell the Fed's movement into an easing cycle. And perhaps that would put a stop to it. Well, then the news before yesterday's market was that perhaps Trump's going to be a little bit more specific and targeted on the tariffs, maybe not as widespread as what was originally believed. And so that sent the futures to the upside. We had the gap up. I'll go ahead and spread this chart out again a little bit more so that you can see the bar there, that there was the open. We traded all the way up, hit that resistance at 600, which is exactly where the left shoulder and right shoulder would be if it is going to be a head and shoulders pattern. And then we came off those highs, still finishing nicely to the upside yesterday, but well off of the highs. But we did close above there's the 10-day moving average of the lime green line. The fuchsia colored line is a 30-day moving average, and this royal blue line is a 50-day moving average. So we managed to close above all those yesterday. So far, different story today. We opened to the upside, and then we had some economic news that came out with the JOLTS report, which was much higher than expected, and the prices paid component, which I think is what's spooking the market at this point in time, was more elevated than expected. And we also had the non-manufacturing number coming in much higher than expected. You would think that might be a good thing, but perhaps there's a concern that if the demand is still high, we still have the opportunity for inflation to come into the mix. The bond market certainly thinks that, and we'll look at that in just a moment. But right now, we opened higher and we're trading down. Now, is this just filling the gap? You can see that we did trade below the 50-day moving average intraday. And at this moment, as we are talking, we are right on the 50-day moving average. So let me go ahead and condense the chart back down, and we'll go to an intraday chart. That's one of the great features of this software, is that not only do you get the Elliott wave algorithm exactly as Ralph Nelson Elliott wrote it, one of the few softwares that exist in the market that do that. Most of them are personal adaptations, but you also get it live. So if by chance you haven't heard me say do this, go to hub.com, HUBB.com, and get the software. You get all this Elliott wave stuff for free. There is an opportunity to subscribe to the AI signals, and they've been, since we started in September of 23, generating pretty amazing returns. But the Elliott wave part is free. So let's go. I like to look at a 3-minute chart, and you'll clearly see what happened here as that economic news came out. So we opened up, the economic news came out at 10 a.m., and then boom, to the downside since then. Now down here it says insufficient data because we need 377 data points. So each one of those bars is a data point. So all you have to do is condense the chart down, and you keep doing it until now the algorithm has enough data to give you an intraday Elliott wave pattern. So if you like to trade short term, all the rules that we talk about apply on a short term basis. So I know some of you are a little more, we're in a instant gratification world now, aren't we, with TikTok and YouTube Shorts and everything else. So if you do like to trade on a shorter term, this works well. And so we had a 5-wave pattern. Now, we didn't quite make it down to this tap box, which is the wave 5 low projection here, but we did get to the top part of it, enough to label that wave 5, and it's a 58% downward move in the wave 5. We had a perfect 50% correction in the wave 4, move back down. This could be the end of the intraday 5-wave pattern. If you're not familiar with the intricacies of Elliott wave, when you have a wave 5 that extends less than 100%, the Elliott wave rules are you retrace back to the previous wave 4, which means if we are indeed done with this wave 5 low, we're going to come all the way back up here, at least to where this wave 4 is. This could just be a bounce. We're hitting the intraday 50-day moving average again right at this moment. We could still roll over and come back down and have a lower move. This could just be a little bit of a bounce off this level, or we could be done and go up to the wave 4. And then we'll have to see where we go from there on the new intraday pattern that would come out, because if that wave 5 is done and we move back to the previous 4, all of the Elliott wave rules for a 5-wave pattern have been satisfied, and then the market tells us where the next move is, and that's how you make your trading decisions. And when you're in between setting up impulse patterns, that's when you go on pause and wait. So you act when you get the signals, and you pause when it tells you to pause. Trading what the charts tell you, not what you think is going to happen, which is key. So that's what's been going on over the past couple of days. That's the news-driven events. And so we've had just pretty much some wild move. In my outlook for 2025, the summary of that could be one word: volatility. I think we're going to have increased volatility in 2025. And gosh, we've already started with that from yesterday and today with these movements that have occurred. That's happened. Now, on a bigger term picture, on the 5-wave pattern, so far, we are holding that wave 4 low, right around the 38.2% fib level. We bounced off of it with the gap yesterday. I wish we wouldn't have had a gap, but we had that news that came out today, sparking concerns again about the potential for inflation coming back and the Fed perhaps not easing as much as the market would hope. They've already told us they're not going to cut as many times as the market originally thought. Market seemed to absorb that okay, although we had these downward moves, but we've held down here around this 580 level and that wave 4. And I have a little bit of a channel drawn here at the top of those two shoulders, as well as the support that's not only at this wave 4 level, but also where we had resistance back in October. So a little bit of history here with where we're moving. Now we need to see where we go from here. If we break above 600, then it can just be some intraday short-term volatility, and we move to the upside and go up and hit that wave 5, which is over here around 635 would be what we're looking at, 630 on the lower end of that tap box. That's time and price projection is what tap box means, if that's a new term to you. But for now, this is one of those periods where you kind of just sit and wait. And that's what the AI has been telling us. The AI gives us signals on expected moves both to the bullish or bearish side, and even sideways moves if you like to trade sideways. You have AI signals for all of those, and we'll cover all that stuff tomorrow night. But right now we're in this little bit of a channel. If we can break above 600 and disqualify this potential head and shoulders pattern, I know a lot of people talk about how they don't like how Elliott wave relabels when a certain pattern becomes disqualified. You're viewing it completely wrong, in my opinion. I think that's one of the greatest things about Elliott wave is a very quick technical indicator to move with the markets. The markets are dynamic, they're not static. And if you have an indicator that is slower to react, you're going to be in losing trades longer and not moving into where the next trades are expected to go faster. So you want an indicator that moves with the market. So people that view that as a negative, I think, have it 180 degrees wrong. It's a positive. So right now, if we disqualify this head and shoulders pattern, that's a classic technical pattern setup. Has nothing to do with Elliott wave. So this could become disqualified, or this could become fruition. And that's exactly how Elliott wave works, but in a better manner, in my opinion. So right now, in between this channel, this is kind of, okay, we've got a lot of news moving the markets, in addition to without the Santa Claus rally. And when we have a year like we had in 2024, where the market had a nice movement to the upside, that creates a little bit more volatility and does create the opportunity not to have a Santa Claus rally. What do I mean by that? Well, when you have people that have performed with the S&P, so they had a good year, since the market had a good year, they take the last part of the month off in December. After the Thanksgiving holiday, they're pretty much done. Then you have the rest of the big investment managers scrambling to try to at least match the performance so they get their bonuses. And if you're not familiar, I'm in the past life was a registered securities principal. I know how all this works. Your bonuses are tied to whether or not you match the performance of the S&P or not, because investment companies want you to be trading with them, not just doing some sort of like a SPY ETF or something along those lines. And when they're scrambling to try to meet performance, obviously moving the market to the downside kind of helps their performance on trades that they've already achieved. So that factors in. And then there's the other side of it with people that are chasing performance. And that creates exactly what we've seen, was this up and down movement within this trading channel over the past couple of weeks. So even though historically the Santa Claus rally happens a high percentage of the time, we did have the perfect storm this year for not having one, and that's the way we played out. So if we break above 600, it disqualifies the head and shoulders pattern, and likely we are in the wave 5 move to the upside, and we're just going through some short-term volatility here. However, if we break down below this level where that wave 4 is, right around the 580 level, then that means that at least we're going to create a lower wave 4 here, probably down to 50% or 61.8%, which means we might have a little bit more of a downward move. But we have to break this support level first that so far has held. So even though the market seems like it's been kind of rough over the past couple of weeks, from a really pure technical standpoint, not that big a deal. This is more whipsawing type of stuff going on. But as I said, I think this is what we're going to see throughout this year. I think we're going to see outside moves to the upside and outside move to the downside. And if you're an options trader, as we are obviously at Elliott Wave Options, hence the name, that's exactly what you want. So we're extremely excited about what can come from 2025 with volatility. That's all you want. If you talk to seasoned option traders and ask them, what's the one thing you want as an options trader? They're going to say volatility. And I think we're going to have that. So that's what's going on now. That gets you kind of up to date of what happened on Wino, Santa Claus rally, etc. At this point right now, we just need to wait and see how things break out. So I'll take a look at the VIX, but then I want to go quickly to the bond market because that's moving quite significantly today. So here you can see that, again, it feels like a lot of stuff is going on, but in the grand scheme of things, not really moving that much on the VIX. So we had a little bit of a blip up. We got above 15, but then we came right back down. And right now we're trading at 16 on the VIX. And we'll see if we break that 580 level, that VIX is going to go to the upside. If we break above 600 and start that wave 5, you'll see that VIX start to come back down. So we're not getting a huge signal right now out of what's going on in the VIX, but we have to keep an eye on this. And in the U.S. market updates that we do on YouTube, where you can leave comments there on the commentary that I do. We took the last 2 weeks off, which we always do at the end of the year, but we'll have a new U.S. market update coming up at the end of this week. So a lot of people were saying, nope, the equities market has it right. The bond market is wrong. Well, maybe. But historically, the bond market is usually right. And where we are right now, look at this. This is the 20-year. This is TLT. And we had kind of leveled off on prices, so we were getting a little bit of a break on the move up in interest rates. But with the news that came out today, you can see a renewed concern. A little bit of one yesterday, but a big move to the downside in prices, which means yields have jumped back up again today. So if you looked at the market, if you're watching the market when we came out with that economic news, yields spiked, and it was amazing to watch what happened. So there's what I'm talking about. Here's the intraday chart of TLT. So you can see we're doing okay. And then the economic news came out with the JOLTS report, et cetera, and bam, to the downside in prices, which means that was the spike up in yield. So right when prices went down, yield spiked to the upside. My experience has been you never ignore the bond market. There's more money in the bond market than there is in the equities market, and there's a lot of smart traders in the bond market. So when the bond market is concerned, and it's a little bit twitchy, if you want to say right now, sketchy, whatever word you want to use, you have to pay attention to that. Now we are trying to move back up in prices, and that coincides with whether or not that intraday 5-wave pattern is complete in the equities market, but we can't ignore this that's going on. It's a mistake to do so. So the bond market is still concerned about, maybe it's not inflation that is concerned about, maybe it's more concerned about the Fed not easing as much as expected as we move into 2025. The Fed's already told us to look for 2 more rate cuts, but further out in the year. So the Fed is basically on pause right now. There's not going to be, at least if we go by what they say, any more rate cuts early in 2025. So the bond market is creating something that we need to pay attention to. It's creating a little bit of concern. We have not had an official recession yet, which does normally happen when we have an inverted yield curve, and we've had an inverted yield curve for basically all of 2024. So there's concern in the bond market. It's worried about something. Is it a black swan type of event? Who knows? But I do think it's a mistake to ignore this. Now, we are right in the middle of the tap box here on this movement down. So maybe this is it. Maybe this is the flush out of prices and yields, and we're going to turn and reverse back to the upside. The concern here is that this wave 5 is getting awfully close to that 100% level that I just talked to you about. And if we move down past 100%, that means on the bounce, you don't go back to the previous 4. You only bounce up to the 61.8% level. So that means that yields would not come down that much. Prices would go up a little bit and yields would come down a little bit, but not significantly. So right now, we're waiting to see. There was all this rhetoric about big tariffs coming. And then yesterday, maybe they'll be a little more targeted, not so much. There was some data that I read over the weekend that when you went back to President-elect Trump's first term and the tariffs that he enacted, really didn't do much to import inflation. And then the view is, but it's different this time. We're in a different market. I put that in quotations because anytime someone says it's different this time, I usually look at that in a suspect manner that it's usually not different this time. So their concern is that any additional tariffs with where we are right now could import inflation. Maybe, maybe not. We'll find out. But what we need is to get to the inauguration, and we need to get President-elect Trump actually in office so we can see what he's doing, not just what he's saying. So what are the policies going to be? What are the tariffs going to be? How severe are they going to be? And I think when you go to look, and I'm just going to jump right to the metals, and then we'll come back to the rest of the markets because they have no idea what's going to happen. And you look at the chart of gold with this big, huge symmetrical triangle, we're going to get a big move out of gold at some point in the not too distant future. Which direction is it going to be? I think that we could continue this consolidation into the inauguration until we actually find out what the tariffs are going to be and the likelihood of that. But when we condense the chart a bit, it's one of my favorite breakout patterns where we have this movement to the upside and then we go through a consolidation in a symmetrical triangle. That pattern, an extremely high percentage of the time, has a big breakout. So it does look like we're going to have a significant breakout in GLD. In fact, we sent out an alert to our alert subscribers at EWO Trader today on a strangle for GLD. I think it's time. We've been consolidating for quite some time, and that breakout is going to come sooner rather than later, I believe. So we had a wave 5 on GLD that went up to 90%. If this is it, and that's the end, which is classic Elliott wave pattern, when a wave 5 ends, you go through one of the consolidation patterns, one of the corrective patterns, a flat zigzag or triangle, in this case, clearly a triangle. And then you get the breakout move to start the new impulse pattern. Well, which direction is that going to be? We'll have to wait for the breakout on GLD to find out. And again, it might take us till Inauguration Day to really know. President Trump likes to use those executive orders, if you know, from his first term. So we're going to find out rather quickly, I think, what he's going to do. Within the first couple of days of the administration, I think you're going to see things happen. But look where we would go in GLD if that is the end of the impulse pattern, the 5-wave pattern. The wave 4 is way down here at 210. So that would be a significant move lower in GLD or gold. If we break to the upside, then perhaps we start a new impulse pattern to the upside. But if the concern is inflation and we start to see inflation data tick up a little bit, you'll see a breakdown in GLD. If it looks like, okay, it's under control, we're not going to get the kind of tariffs that we thought, then we could see a break to the upside in GLD. When we look at SLV, we'll look at USO in a minute. Not quite the same pattern here. You can see the wave 4 went down to 80%, which means that's a disqualified Elliott wave pattern. So we don't have the same symmetrical triangle that we do in GLD. Not as clear cut of a pattern on SLV. Perhaps the inclusion with silver and so much of the electronics, etc. Maybe you could make a case for a bit of a descending triangle. Wouldn't be the greatest triangle pattern that I've seen before, but we do have some lower highs on the SLV, and we're trying to hold support down there around 27. So that's a possibility there on silver, but we're just going to have to wait and see how it all plays out. All right, let's go back and look at the rest of the U.S. markets, and then we'll get into cryptos. which have been moving as well. Pretty wildly volatility. There's always increased volatility in the crypto world to start with, but perhaps even more that we're going to see here coming into 2025, at least if things continue the way they've started. That could be it. So we look at the DIA. So here's the Dow, and we're not getting quite that move. You can see as I spread the chart out from yesterday, we had a little bit of move up, but nothing like what we had in the SPY. We didn't get the gap up. We didn't get above the 50-day moving average. So not as much interest in the Dow. We're just kind of consolidating right here, following this zigzag pattern to the upside. So when a zigzag ends, you go back and retrace the C wave. We've already done that, and we're holding in the support area right around 420. Can that continue to hold? But when we did have some action in the Dow towards the end of the year here in November, where it seemed like money was rotating into the Dow, it appears like that's come back out. So where's that money going? We'll have to wait and see. So far, prices going down on bonds means it's not moving into the bond market, at least not yet. And then if we go and look at the Qs yesterday, even with the tick up in rates, managed to move to the upside. Not so much today. A little bit more of a tick up in rates today than we had yesterday. And so, as you would expect, the Qs coming back down. Maybe we're starting to form, and we can just extend this line here on the lower highs. Maybe we're forming a descending triangle in the Qs with that base being right there around 510, which happened to coincide with the completion of this zigzag over here back in October. So since that, we've been in more of a flat type pattern on the Qs, even though we moved up, coming back down. We're trying to hold the 10-day moving average. We are above the 50-day moving average, but at this point, we filled the gap. We have to see what happens over the next couple of trading days. So you want to watch that U.S. market update with the rest of the week to see if we're able to break out of this trend line of lower highs, break below support. Where do we go on the Qs? Perhaps a little bit of sideways movement over the next couple of days. If that happens, then we have a pretty well-formed descending triangle on the Qs. And then the IWM, which most people believe, including myself, are fairly rate sensitive. They move with interest rates. Not so much to the upside yesterday, which you would expect, since rates did tick up yesterday, even as we had that gap up in the S&P. And then today, when we get a little bit more of a move up in rates, you can see that we've come back down, trying to hold the 10-day moving average here. The level to watch on the IWM is 220. Can we hold that level and try to create a new bounce to the upside, or are we going to break down? And if we do, the next level of support on the IWM will be 205. So you want to watch if you're a small caps trader, like the IWM, you want to watch that 220 level. That's going to be key. All right, now let's take a look at the cryptos. So big move up yesterday. We're giving it all back today. So you can see yesterday we had the big move up, got back above 100,000, and then we're right back down. We're at the 30-day moving average. There's no damage technically done to the chart of Bitcoin. I know that it trades 24/7, but as the date rolls over, it does give an end-of-day print so that you can look at the chart patterns on a end-of-day basis, and we want to see where we close. Can we get back above that 10-day moving average? And the key level would be get back above 100,000. So even though a pretty good down day in Bitcoin today, not really too much of a concern yet, at least from a technical standpoint. It doesn't feel good if you hold Bitcoin today, but you had a heck of a year last year, so I don't think anybody's complaining too much about what's gone on there. Ethereum, we need to get back up towards 4,000 and try to break that level. So we started mounting a move to the upside in Ethereum. Now we're right back down to this whole consolidation area that occurred at the end of December, where we went through that area. And we had a little bit of a, not super well formed, but a little bit of a symmetrical triangle here on Ethereum right there. So it wasn't very big. We had the upward breakout. As you know from triangle rules, if you've listened, In the past, part of the Elliott wave triangle rules are once you get a breakout, you're going to test the point of the breakout. Same thing as gaps. Does it happen right away or does it take its time? Right now, it is testing it rather quickly. So we'll want to see if Ethereum can hold in this 3,500 level. If not, we're going to come back down to 3,000 on Ethereum. So if you're trading Ethereum, we're right at the 50-day moving average. You want it back above that 3,500 and back on the march up to 4,000. So can that happen? We'll wait and see. A couple other symbols in the crypto world that people like to look at. If we look at Cardano, had a nice move a few days ago, consolidated it, back down a little bit today, but still holding above the 10-day moving average and just above $1. Then we come over here and look at XRP and just kind of consolidating that big move that it had. You can see down here, this is what you want if you're trading this after you had this it was just asleep and then took off. We basically went from 50 cents to $2.75 in a couple of weeks, which is an amazing move. And when we have these big kind of moves, you're subject to some more significant correction. So far, not so bad. A slight level of lower highs, not too significant there, but still holding in at 228. And if you go back and you had it at 50 cents a month and a half ago, you're pretty excited right now that we're still holding in that level. So lots of volatility going on in crypto land, but so far still pretty bullish looking charts on a bigger picture basis aside from the intraday moves. And that's what I was talking about in the very beginning. When we had these kind of in-between things, that's when you pause. When you get the signals, you jump on them. When it tells you to pause, you pause. And that's what the AI has been telling us on the SPY. We haven't been getting strong signals on the bullish side or strong signals on the bearish side. We've had signals on both, but when you don't have a signal strong enough to enact a trade, it's telling you, stay away. This is the point in time where you don't do anything. And sometimes the best trade is no trade. I mentioned this to our EWO subscribers yesterday, that I'm so old school. I've just got a lined paper notebook where I have my trading rules on it. And one of the things that you should have in your trading rules, no matter where you keep them, is that phrase that I just said. Sometimes the best trade is no trade, meaning that putting on bullish trades is great, or winning trades is great. Doesn't have to be bullish, but winning trades. But not putting on losing trades is just as good as having winning trades when the market is in an in-between state of flux along these lines. Let's take a look at natural gas, which, boy, it did break out of this triangle, and now we're right back testing the top end of this ascending triangle pattern that we had. You can see where we had resistance right here at 16. We had the lows down around 12. We marched to the upside with the higher lows, and then we had a breakout, but it was one day. There was no follow through to it. Immediately coming back to test the triangle, and that's what I was telling you. Triangles, the breakout gets tested, whether or not it's immediately or a little bit of time in the future. We have to wait and see. So with natural gas, I can tell you it's awfully darn cold here in the mountains, North Carolina. A little bit of snow yesterday. Don't get a whole lot of snow here, but it is cold. The Farmer's Almanac tells us some areas are going to have more of an extreme winter, but other parts of the country pretty mild. And it seems like the natural gas traders just haven't been able to figure out what to do. Do we short? Do we go long? And we still don't have an answer. It looked like we had one that we were going to take off, but it got reversed immediately. But right now, again, testing 16, we keep an eye on that. If we can hold here right at the 10-day moving average and turn around, bounce back up, then you have a bullish trade in UNG. So we could have a trade here very soon, but we need another day or two of data here to figure it out. Oil has broken to the upside. There was an interview or a press conference, if you will, with President-elect Trump just a little bit earlier this morning, and he used the phrase again, drill, baby, drill. And my viewpoint has been that oil is likely going to stay in a big trading range. We did have this triangle, So we're going to break out of the triangle. We did, but can we break above this resistance level where I've drawn the line? That'll be the key. If we can break above that, then we could have a big run up in oil. I would be surprised if that happens. My thesis has been, as you know, if you were watching us at the end of the year, that oil is going to be in a big trading range for a while because, again, my thesis is that if we create more domestic production, which President-elect Trump has vowed to do, OPEC is going to cut their production to meet that because they want to keep oil prices elevated so they can make as much money as they can with the amount of oil they have left. You've heard me say this before. They've done the geological surveys. They know that they're running out. And so I don't think they're going to allow increased domestic production to bring prices down the way the administration is hoping that they will. I just think they're going to cut their own production to match the increase. I could be completely wrong. It's just the thesis that I feel that oil stays in this big range here in an elevated level, but not screaming to the upside and maybe not breaking down to the downside as much as the incoming administration may hope. And so we'll see. But right now we're at resistance. So just like I mentioned with UNG, we keep a close eye on USO. There may be a trade there in the very near future as well. If we break above this level and take off, then you have a bullish trade. But if we hold this resistance right here, start to head back down, note the gap again. We are a little bit overbought from the 10-day moving average. So a little bit of sideways movement here, maybe a little backing and filling is warranted. But we want to see if we can break this trend line here. That's going to be the key. All right, let's look at a few international markets, and then we'll start looking at previous case studies and potential new case study for today. So we'll start off with the market down under in Australia, which is heavily resource rich, so they tend to move with what happens with the metals. They kind of got discorrelated. Correlations exist in the market until they don't. You can go through periods of time where, okay, if gold and silver go up, Australia goes up. Other resources as well, just not gold and silver. But then we've had, throughout the consolidation of gold, we've had this move down, maybe more coinciding with that price chart of SLV. But for now, we did manage to get back above the 10-day moving average, but a pretty big move to the downside here on EWA. We had this ascending triangle pattern. This gives me the opportunity to talk about one of the things that really sticks in my craw with people that talk about triangles. There's so much information out on the internet that an ascending triangle means an upside breakout. A descending triangle means a downside breakout. Symmetrical triangle can go either way. Data doesn't show that. The data shows that it doesn't matter what the formation of the triangle is. When you have a triangle, consolidating triangle, regardless of which of the three it is, you're going to have a breakout move. And you can see we had an ascending triangle and we broke to the downside on EWA. So there's a perfect example of it. You might have thought that was going to go higher. It didn't. It went lower. And we got a little bit away from the 10-day moving average on the low. So there's that rule. No security in any time frame gets too far from the 10-day moving average. So we got to the point where we're too far below it. We bounced back up. And now we're trading right around it. So it's wait and see mode on the Aussie market right now. Then looking at Canada, and we're going to look at the EWG as well. All these charts are really concerned about the tariffs that President-elect Trump may put in place. Notice that chart looks quite similar to the one of Australia. Those two have been a bit in correlation for a while now, and we've come up towards the 50-day moving average and holding here. I don't think we're going to get too much of a significant move out of the EWC either until President-elect Trump is inaugurated and we start to see what exact policies are going to come out. If you've been reading the news, you know they're quite concerned across the pond, as they say, about potential tariffs that President-elect Trump's been talking about. We're starting to form a bit of consolidation here with EWG. Probably has some more work to do, but this is a huge potential triangle being formed here, which means that we are going to see some sort of a breakout. But are the tariffs going to be significant? Are they not? that will determine the breakout. So maybe we have a few more days here of just kind of churning in this range around 32 on the EWG until we get the exact actions that President-elect Trump is going to take. Looking at FXI, looks like a pretty interesting setup here for a potential breakout. Look at this descending triangle pattern that we have here. Looks like maybe we're trying to sneak to the downside. This is the one everybody's watching, right? What is Trump going to do with the China market? Is he going to enact further tariffs? Highly likely. How significant are they going to be? If we break to the downside, there's the next support level down there just above 25. We break to the upside, we could be off and running because the China market, other than these few blips here, which none of them had follow through, there, and there, are just creating kind of the lower highs. It looked like maybe we were breaking the pattern that we were setting up with lower highs over here at the beginning of December, early to mid-December, but no, right back down into the triangle. So that we're going to see pretty soon on what happens on FXI. So another one to keep a very close eye on there. And then last but not least, the INDA, which has had a great couple of years, if you know, and a little bit of consolidation and backing right now. We have this pretty well structured downward zigzag pattern with the B right close to the 50% level. We're starting to break down below that A wave, which means that it is likely that we're going to see the completion of that C wave extension on the zigzag pattern, which would bring us down to around 50. I was commenting before we had the holiday break that whether or not we could hold this A wave impulse low would determine whether or not this zigzag pattern was going to come to fruition. But the fact that we're breaking this A wave impulse low moves this pattern. And this is in the world of Elliott wave, you have qualified patterns and you have confirmed patterns. And so there's a difference between the two. Qualified pattern means that perhaps that's going to play out. When it's confirmed, that means there's a high likelihood it's going to play out. Nothing's ever 100%, as you know, but it does look like perhaps the INDA is going to break lower. There's been an awful lot of market pundits that are still quite bullish on the INDA. But again, after the huge run that it's had, perhaps a little bit of downward move is warranted. The markets have to correct at some point in time. So I switched this one over to the weekly chart, and you can see how nicely that downward zigzag is set up. But you also can see how big that run was going all the way back to 2023. Early in the spring of 2023 is where the big part of this rally started. So correcting back down a bit, completing the zigzag down around 50, not that big a deal, and probably pretty well constructed for charting, because if you're wanting to trade long, you got to understand the market doesn't go up forever. It doesn't go up or it doesn't go down forever. There's going to be corrective moves, and maybe that's what's going on in the INDA. So even with all of the commentary about things still look good in India, Vietnam, those are areas that are taking away some of the business from China from production, and that's what ensued with that big run. And perhaps this corrective move is just good technical analysis, good technical correction set up for the market to continue to move higher from here. So real quickly, taking a look at some of the past case studies that we've looked at, and we looked at H, which was Hyatt Hotels, and we're still within the range of the AI, but getting close. And this is another cool thing about the AI, is it gives you your stops. People are always asking about stops. Well, it gives you one. It gives you a target and it gives you a fail zone. Right now, we're just kind of consolidating along. So we haven't had a big move up. We're getting close, but we haven't failed that move yet. So when you're in between, you just stay patient. Some of these AI signals move immediately. We had tons of them that move real quickly. And in December, we had several that were bearish that worked within a day or less. We had 3 or 4 of them in a row. That's great when those happen. Other times it takes a little more time to play out, but the accuracy over time has been pretty amazing. And then we had CVS that we looked at, was the last case study on a potential move lower. So far, we're holding here at this 161.8% level. It's kind of where we thought we were going to go, and we did. So can we break lower than that? We'll have to wait and see if we can hold this 42.5 level. But that was you can see how well that zigzag worked all the way down to that 161.8% extension level. So what we'll be looking at, there is not a current AI signal at the moment. So what would you want to look at as far as where we go? Well, we do have one that's close. So I'm just giving you a preview of how this works. The bullish side, we have iRobot, but the score is not high enough for us to send out an alert to our alert subscribers. On the bearish side, we do have EQR. So let's take a look at that. And there you can see that it looks like it wants to move lower. Not too much lower from where we are, though. Just about a 2-point move. But that is going to be our case study consideration for this week. For the very first TradeFinder of the year, we're going to look for EQR to move down 2 points down to 65. That's going to be what we look for. So it's been a while. I do want to allow enough time for Q&A. So we'll do some question and answer. And then if you hang in till the end, Zach will come on and show you how you can post an idea, which is another great feature of the software. The social media aspect of it, I think, is so much better than Reddit, etc., because now we have an opportunity to put charts, etc. People can comment on it. You can put your own ideas. You can see what other people think of your ideas, and it's great. And people are very respectful, understanding that differing ideas is what makes markets. If everybody views the market or any security the same way, there's no trades. You have to have trades on both sides. If there's a buyer, there has to be a seller. But it's always interesting if you have an idea, I think, from a curiosity standpoint, you post your idea. What do others think of my idea? And what ends up being right in the end? So pretty interesting stuff. So with that, Zach, let's do some questions, and then we can come back in and complete this here at the end of the hour.
Sounds great. And I echo those sentiments, Rob. It's great to be back on TradeFinder with everyone. And we'll get right into the questions here. Got a question from Will on Tesla. What's next, 500 or 300?
Well, they had a downgrade today. So, you can't discount the incredible move to the upside. We moved higher. You can see where the zigzag pattern was 100% there, just under 450. So I thought we'd go up there. We almost made it to the 161.8% extension level, which in looking at zigzag rules, that would have been the next level of an extension. So the B wave was right around 38.2. So you look for a 61.8% extension. If you extend further, you go to 100%. So we got pretty extended from an LA wave standpoint on this wave 3. We came back down. You can see even with the downgrade today, not really affecting it that much. We're still holding this wave 4 level right here. So perhaps that's as far as we go. And then we turn and move back to the upside. So as far as answering Will's question, sorry, there's some maintenance going on, but as far as Will's question, what comes next? I want to see what happens with this wave 4. It's right at the 50-day moving average. As long as we stay above the 50-day moving average, I think you have to stay bullish on Tesla. But then you also have to understand that was an amazing run post-election with, you've seen all the commentary between President-elect Trump and Elon on his involvement with the new administration, et cetera. And we got a little bit ahead of ourselves. So this corrective move is not concerning. So, well, I think we have to watch the 50-day moving average. If we break below that, well, then we're probably coming all the way back down here to 300. So as far as what's next, 500 or 300, there could be a good likelihood of 300. But as long as this wave 4 is in place here and it's right at the 50-day moving average, that's two good levels. So you have a fib level support and you also have a 50-day moving average support. So there's a lot of support here, not too far from where we are. And if that holds and we bounce back up, so if we break above this 100% extension line, so that would be around that 425 level again, then I think 500 is next. If we break below the 50-day moving average, then 300 is next. So I don't think I can make that call right now, Will, but those are the two levels to watch. So if we break above 425, I do think we go to 500. We break below the 50-day moving average at 375, then I think we go to 300. So there is a trade there, but I think, again, it's wait and see mode right now.
Very well. Thanks, Rob. Next up, we got a couple symbols from Maria. First one's going to be NVIDIA.
They the CEO does a masterful job of creating excitement in NVIDIA. Everything he says is the world is your oyster kind of stuff. And there was more news about that. And you can see that it did give us the gap up with the market yesterday. And then we even opened higher today. We've come down and filled the gap. Now with NVIDIA, we are holding the 10-day moving average. We did have this descending triangle where we had a little bit of a false breakout to the downside and then the breakout to the upside. And now we're back testing that. So same thing I've been talking about on these triangles, testing the points of the breakout. So if we can hold the 10-day moving average, and this is where the rates play in. If the rates are going to kind of stop now with the tick up in rates, tick down in the prices of the bond market, if we can get a little bit of a breather there from the bond market, then I do think you could see NVIDIA move higher. The wave 5 only went to 47%, which could have gone higher than that. But it's not 100%. So we have the opportunity of coming all the way down to this previous 4. But Maria, with NVIDIA, is watch the 10-day moving average, I believe, because you can see all the major moving averages that I like to watch, the 10, 30, and 50, are all pretty much at the exact same spot. So if we can hold right here, perhaps we can bounce and make a new wave 5 high. But since the algorithm has colored that purple, which is the color that you can change these colors if you want, but the color that I like for showing that if a wave is done, the algorithm is thinking that could be the end of the wave 5, meaning that we could be heading back down. But it's all going to depend on the bond market. So I think we just see if that wave 5 is done on TLT. And if it is, and we start to get a break in rates, then I think we could turn and go right back to the upside. So right now we're just testing the point of the breakout of the triangle. Again, classic, exactly what's expected to do. But another one that's hard to make a call. And that's going to be, I think that's kind of going to be where we are until Inauguration Day, is you're going to see a lot of these charts that are in wait and see mode until we get more direct information on the actions that President-elect Trump takes once he gets in office, and it's not just talking points anymore. We'll see what policies are actually put in place.
Thanks, Rob. Second symbol is going to be PLTR.
Good old Palantir, which had a great run itself. And got a little bit ahead of itself. And the reason that it says that is they changed exchanges. And so that's why you don't see all the data. They moved to a different exchange. So the data from here, you can change the chart and put it on previous exchange if you want to. But right now, I think Palantir is holding in there pretty well. We are below the 10-day moving average on the new exchange. But considering the run that it had, I think if we can hold right here, we're right at the area that needs to hold. At 70 here on Palantir. We're a little bit oversold with today's move. You can see the 10-day moving average and the separation. But if we can hold 70 and bounce, then Palantir can go higher from here. However, if we break 70, then it's not quite a Katie bar the door, Zach, but it would be a good bearish trade if we don't hold 70. So you keep an eye on that. I don't think we'll get that information for a couple more days. But you break a 70, you've got a good bearish trade there. We're going to need to get back above that 10-day moving average to go bullish again, but right at an area that needs to hold. So keep an eye on 70 for Palantir. That's going to be key.
Very well. Thanks, Rob. Next up, we're going to go over to LLY for Manuel.
Good old Eli Lilly. And maybe if things start to get dicey with the equities markets on more inflationary fears, etc. We could catch a bid here, but it is a pretty well-formed five-wave pattern to the downside here on Eli Lilly, but we got to break below 750 first. So if it does appear that when President-elect Trump is inaugurated and the policies come out, they're not as severe as feared on the tariff front, then you could see a breakdown of Eli Lilly down below 750. You know, the RFK Jr. as the health czar, et cetera, and what he's planning on doing. So there's a lot of concern here on these type of stocks, and that could offset any potential defensive-minded people that would typically move into this area. That's creating a real conundrum for people that have that as their correlation, that if the equities market with higher beta stuff starts to break down, normally you go here into healthcare, et cetera, for your safety, kind of a hedge, if you will. But now we have the potential for, wide-ranging changes in regulations on the healthcare sector, and could be a negative there. I'm watching this one pretty closely myself, because I think if we break below 750, you got a great downside trade there on Eli Lilly. So perhaps we stay right in this area into inauguration day as well. We start to see what kind of regulations, et cetera, are going to be put in place in healthcare, what kind of changes, et cetera, are coming. And that's an area of concern for that sector right now. So we'll wait and see if we can hold 750. That's the area to watch there. But as I said, if we break below 750, because this five-way pattern is so well formed, that could be a great downside trade on Eli Lilly.
Very well. I want to do one more symbol, and then I'll head over to the platform to show everyone how to post the case study consideration on the or idea for this week.
Okay, sounds good.
All right, the last symbol will be from Bill, and that's going to be on MELI.
Oh, blast from the past, Bill. I've talked about this when we've looked at it in the past, that, gosh, I used to trade this stock a lot, because look at how that moves. This thing it's amazing how it moves. And just refresh here, and some people like to see that symbol up there, but you can see how the movement there is just wild in this stock. And trading at 2,000, stock split, you would think would make sense here. We do have a five-way pattern to the downside, and we're right at a level here. We broke below it, but we came back up, and we're testing it now right there at 1,800. So if we break below that, I think maybe that wave 3 goes lower. Here's what I was talking about before on the way the algorithm labels it. See how that's green? So that's telling you that the algorithm is not sure that wave 3 is done yet. When the algorithm believes that the wave is complete, it turns it purple. So there's this wait and see mode here. If we back down from 1,800, then we would likely at least test the wave 3 low, and could even go lower than that. And I would say there's a likelihood that's what would happen, as if we don't hold this level, that we head even lower. So I think you could be sitting on a great bearish trade here, but we'll keep an eye on it and see. It wouldn't, if you're looking for, the wave 4 bounce, right, on a five-way pattern and downside, if we break down below this, then that probably becomes labeled as the 4, and we look for the wave 5 down rather than an increase moving the wave 3 down. But this looks like, and tough talk on Mexico, et cetera. I think that could be a pretty good setup for a bearish trade as well in the next couple of weeks. But keep an eye on that 1,800 level. All right, Zach.
Very well. Thanks for a insightful session to start out this new year. We'll head over to the platform now. So hopefully everyone can now see the dashboard here. We're going to go over to the ideas light bulb symbol up here on the top right toolbar. And Rob, this is going to be an official case study consideration, or official idea, that is?
It is going to be an official idea.
Very well. So as we can see over here on the left toolbar, we're going to click on New Idea. We'll go to Create an Idea, which is again an official idea versus a post in comparison. A post is going to be more of a draft idea, waiting for that criteria to be fulfilled before making it an official idea. We will go with EQR down to 65. So we'll do the symbol search for EQR, which brings us to the NYSE. And type in 65 for our target price. That's what we were looking for there, Rob, correct?
Correct.
All right. And the time frame on that?
Show them how to do the customization, do 2 months on that one, because it's not that big of a move from here. So
Very well. So as Rob's saying, there's these fixed intervals of time that you can choose from if that happens to fit the time frame you're looking for, or if you need something more specific than that, you can go down to custom. You can go down to the very specific day that you're looking for to have this trade expire on. So we're going to go 2 months out. I always like to go to the next trading day. So we're looking at today's the 7th. So we'll go, which happens to be the Friday of March. This will be made nice and pretty with lots of detail to support this idea here soon. But for now, I'm going to go ahead and confirm and publish this idea. So now, as you can see on the screen, it is posted and available for you to go in and interact. As we've always said, your opinions are welcomed, whether they are agreeing or disagreeing. As Rob has mentioned, the opposing opinions is what makes markets. If everyone agreed on the same idea or concept for the idea, there'd be no trade, there'd be no transaction. There has to be a buyer and seller for each of these option trades. So I think that about sums up the idea for today, for this week's session. We'll keep it short and sweet, allow everyone to get back to the markets, as I know Rob and myself have to as well. So thank you all for joining us for this first session back. It's exciting, lots of exciting events and topics to cover in 2025. And I'll pass back over to you, Rob. One last thing, I am going to put the Hub AI Outlook registration link that I put in the chat in the beginning, just to make sure everyone has a chance to register for that if they are interested. Lots of insightful information to take advantage of.
sounds great. Thanks, Zach. Appreciate all the work behind the scenes. And again, welcome to 2025. I think it's going to be a great year. I'm really excited about this year and the opportunities that it presents to us. So good to be back. Love interacting with you as well, and look forward to talking to you again next week. Thanks for your attention. Take care, everybody.